An investment is a financial instrument that involves investing funds in order to make a profit. In simple words, it is an investment of money to generate income or save capital. There are financial investments, purchase of securities, and real investments, investments in industry, construction, and so on. An investor is someone who invests his own funds in order to make a profit. It can be both a person and a legal entity, but we will only talk about private investors today. How does it work? To start investing, you need to decide on goals and budget. The main purpose of any investment is to generate income. For example, buying real estate can be considered an investment only if you get more when selling, taking into account inflation and expenses for repairs, utilities, furniture, and household appliances. But there are also more specific goals. Formation of a safety cushion in case you lose your job or get seriously ill. Large purchases, real estate, car, payment for study or vacation. Passive income, that is your additional earnings, which does not require much effort and time. Over time, it can become the main one, and then you won't have to work anymore. The choice of specific instruments with different returns, terms, and risks depends on the purpose of the investment. What kind of investments are there? You can invest in real estate, business, securities, collectibles, antiques, as well as through bank deposits or currency purchases. All these are investment objects. By objects, investments are divided into real, something that is tangible physically, like real estate or jewelry. Financial, everything related to financial transactions, bank deposits or trading on the stock exchange. Venture, investments in startups that will cost much more in the future. Depending on the term of the investment, there are short term up to 1 year, medium term from 1 to 5 years, long term more than 5 years. If you need a financial cushion, it is better to choose such tools that will allow you to access money at any time and not lose on commission or markets fluctuations. It can be a bank deposit, for example. If you don't need the money soon, you can consider long-term investments, trading on the stock exchange, investing in a business, or buying real estate at the excavation stage. Upon receipt of income, investments are divided into regular, those from which you receive income every month or year, for example, a bank deposit, shares with dividends, or real estate that you rent out. Also, there is one term, which generate income only once when selling. According to the degree of risks, there are conservative investments with a low level of risk, moderate, medium risk, and aggressive investments with high risk. The profit that investments bring directly depends on the degree of risk. For example, bank deposits will give you a guaranteed but low income that will barely cover inflation. On the contrary, a certain set of stocks on the stock exchange can bring you on average about 30%, but with such a portfolio, you risk losing everything and even more at any moment. This is the first part of the investment video. In the following parts, I will tell you how to start investing, what investment tools exist, how security differ from each other. Bye-bye.